Expanding market volatility. Are the markets driving you crazy? My name is Dr. Gary Dayton from TradingPsychologyEdge.com, and I'm the author of Trade Mindfully, a book on cutting-edge psychology recently published by the Wiley Trading series. We're going to talk a little bit about the expanding market volatility in recent weeks and some of the erratic behaviors investors and traders are showing and what we can do about it. All right, so market volatility. When we have rising volatility, what it really does is highlight and underscore the risk and the uncertainty in the markets. And this is what makes traders feel that psychological discomfort, that anxiety and stress and fear. And we all know as investors and traders that the more stress we feel, the less good we think. There's an inverse relationship between clear thinking and stress. The more the stress we have, the kind of dumber we become. We feel off-centered, unbalanced. We feel the muscle tension, the headaches, the sleepless nights. No one can think clearly and trade well when they're under the impact of stress and anxiety and even fear. Well, when we look at the S&P 500 index, we see that we were above the 2000 high in February, but by the middle of March, last week in particular, we started to fall down below that. And as we did, market volatility expands as we experienced lower prices. Not an unfamiliar situation. And this, as we said before a moment ago, begins to create stress and anxiety in us, and that helps us to trade in an erratic manner. And let's take a look at Apple, for an example. Apple Corporation. We know that Apple has been pulling the market higher as it's been rallying. It's been pulling the market up to ever higher highs. Now, on Monday, March 9th, Apple Corp had a special event that lasted for several hours, announcing things like the new Apple Watch depicted here, new affiliations with HBO for Apple TV, a new revised MacBook, which looked pretty exciting, and a whole bunch of other wonderful things. In addition to that, we also learned that Apple Corp is going to be replacing AT&T on the Dow 30 index. All really good news. Well, this prompted traders and investors to be buying Apple on March 9th. And you can see on the chart here that buying on the news, we see a bump up in volume and a fairly good size bar, range bar. But what happened? The next day, the market came down, and at the end of the week, buyers on Monday are underwater over the weekend. And I can guarantee you that they're not feeling happy this weekend. So this leads us right to the very first element of how to deal with market volatility. And that is, above all else, have a really sound trading and investment method. Doesn't matter whether it's fundamental, technical, or a combination of the two. You need to have a method that works for you and that you follow. Buying on the news is rarely wise and rarely part of a sound investing method. We know from the old Wall Street adage, buy the rumor, sell the news, that this is a truism. And in fact, we know that this is the best traders and investors have a sound method, and buying the news is not part of that method. They have whatever method they follow, they have it and they follow it consistently. And that's important especially all the time, but especially when we are seeing high volatility enter the markets. Another area that investors in particular like to try to do is to find low price stocks. They're looking for those bargain basement, under $10, under $5 stocks, thinking that if I can buy it low enough, I can sell it at a much higher price. Well, here's one stock that was recommended by a well-known news service back in October. It's a TC, a small cap mining concern, but almost as the moment that it was recommended because it was making higher lows, the market started to fall down and down and down. And many of these people who bought this are still long the stock, even though it has fallen down quite a bit from where the recommended entry was. Now, every trade and every investment has a point at which it's not working. And this is exactly where our stop loss should go. And this is part of our this is part of solid money management. We need to be able to cut losing trades. But I've had several people come in and say they're losing on stocks like TC and unable to, or haven't at that point, cut their losing trade short. And they're asking me, gee, what can I do psychologically so I can get better at this? Well, investing in trading psychology should not be thought about to bail out poor decisions. It's not going to do that. It's just not that. It just can't do that. It's also not going to make the investor or the trader feel good. We can't replace sound method and good money management with trading psychology. All the good trading psychology in the world isn't going to be helpful without a good method and good money management. Trading and investing psychology supports sound method and good money management practices, and that's important to understand. Now, one of the very best ways that I know to improve one's trading psychology is through the practice of mindfulness. It's a direct antidote for stress. More than anything else, study after study after study after study shows that stress gets reduced the more we practice mindfulness. And I'll talk a little bit about why that is and how it's important for traders and investors in a moment. The other thing mindfulness does is it helps us hold our thoughts lightly. We may see and we may think Apple is going to go to the moon because of all this great news, but that's just a thought. We don't have to buy into it. And mindfulness helps us not buy into that kind of a thought, but instead keep us focused on our sound method and our good money management practices, rather than be captured by some story that the mind tells us. Now, why is mindfulness so helpful? It actually changes the brain. This is known as brain plasticity, changing the gray matter in our brain. We know from research that the fear center of the brain actually shrinks with mindfulness. We see this, you can see on the screen here, there are some brain images, brain scan images showing some of this shrinkage and alteration in the brain. The amygdala, which is also associated with loss aversion, which is very important for investors and traders. We shrink that down when we practice mindfulness. And this is why stress and fear and anxiety become less and less of an issue for us when we practice mindfulness. It actually changes the brain in positive ways in this regard. Another way the brain gets changed, and actually there are about 8 different areas of the brain that are impacted in a positive way from mindfulness. And I'm talking about 2. One is the fear center, and the other is the executive center, our thinking center. This is the prefrontal cortex. It actually grows, it expands with mindfulness. Now, our thinking center helps us compare and contrast and and plan and evaluate and analyze all the things we need when we are trading in the markets. We need to be able to engage that part of our mind and dampen down the fear center so that we make good, high quality decisions. And mindfulness, above all other things that we know, that I know in psychology, mindfulness is the best in doing that. If we look into the future, we know that the U.S. economy is growing stronger. The Federal Reserve's quantitative easing is pretty much complete. And the zero interest rate policy, although not quite ended yet, the Fed's been talking about ending it maybe sometime this summer, sometime in the fall. Not sure when, but they're talking about it ending. With all of that, the government is going to be less active in the markets, and therefore volatility is going to expand. No question about that. The way to deal with this, pretty simple and pretty straightforward. Number one, have a solid method you can apply consistently. Number two, practice sound money management procedures. Those are two key elements. Underpinning all of this is use psychology to support your method and support your money management. And the best way to do that is to practice mindfulness. Now, we only have a short period of time in this little video. You can learn more about mindfulness and a whole host of other cutting-edge psychological practices through my book, Trade Mindfully. It's available on Amazon, Barnes & Noble, and all the other major outlets. And I encourage you to take a look if you're interested. And I want to thank you for coming in, for listening to this video. And check out tradingpsychologyedge.com for even more in trading psychology and trading the markets. Thank you very much. Bye-bye now.